Big introduction to our feature fireside interview with FSC board member Bradley Rodder in conversation with Dr. Richard Smith, crypto, quantum computing, and where do we go from here? Bradley Rodder is an investor in technologies that impact the security of the homeland. He was a pioneer of the financial futures when trading on the floor of the Chicago Board of Trade and the Chicago Mercantile Exchange. With an extensive background in cybersecurity, Rodder was drawn to cryptocurrency and has been a leader in that space for 8 years as an investor and international speaker. After graduating from West Point, Rodder got his MBA from the University of Chicago. Bradley, Richard, over to you.
Hey, Richard. Ron, and thanks everybody for joining us again. And Brad, it's great to be with you.
Good to see you.
Looking forward to having a good conversation today. And, you know, every time I talk to you, I feel kind of like I'm talking to the Forrest Gump of finance. Am I the first one to make that analogy with you in financial history?
Yes, you are. And the last, hopefully.
And the last, hopefully. Right. Exactly. Sorry about that. But I'm excited to really delve into all the financial history that you have, you know, had a front row seat to, because I think there's so many new people in the markets today, right? There's so much new interest in the markets today. And yet, there's a lot of inexperience. And you've seen multiple cycles of financial innovation and led many of the cycles of financial innovation. So I'd really love to just kind of get into the history of it with you, your history, and kind of, you know, take us through the past, you know, few decades of what's been going on in finance, and then we'll get to today and what's going on today. And so to kick us off, I have this, one of my favorite books, The Complete Turtle Trader here by Michael Cavell. And you're in the index like half a dozen times in this book. You were one of Richard Dennis's first customers or first investors.
I was his first investor, actually, when he started managing money.
And then one of the original turtles was your former employee.
Yes, the Turtles was an interesting project. Maybe it might be best just to step back a few years before that.
Absolutely. Yep.
And I'll tell you how I sort of got interested in the markets. I grew up on a farm in Iowa, which is a small state in the Midwest. And
I think I've heard of it.
I was in charge of hedging our one corn contract for our family farm. So I was trading corn and soybeans at 16. After West Point in the Army, I raced back to Chicago to go to university, but I'd always pictured myself on the floor of the Chicago exchanges. I ended up trading on all three floors of Chicago: the Mercantile Exchange, the Board of Trade, and the Mid-America Exchange is where I started, which was, you know, trading small contracts against Board of Trade contracts. When I got to Chicago, it was the very beginning of a concept called financial futures. It was new, it was untried, untested, and most people were pretty skeptical. But I thought it was a pretty good idea to trade futures contracts on the largest commodity of all, which is money. And so I dove into that feet first. I knew I was right when an old grain trader on the Board of Trade looked at me and said, "We don't need any stinking futures contracts on money." And it turned out that would later be the star contracts of both the Board of Trade and the Mercantile Exchange. That included a stint on Wall Street. Financial futures were slow to take off, so I had some time to go to Wall Street and learn the cash market. So I traded government bonds for E.F. Hutton, God rest their soul. And it was an incredible time in the bond market. I mean, long treasuries were trading at 13.9%.
Mm.
Bond volatility was immensely high. That was clear evidence that we needed a hedging mechanism for interest rate risk. So it turned out to be very successful. From the floor of the Chicago Board of Trade, I became very bullish on bonds when they were trading in the high teens. And so that was one of the best trades that I've made. I had called all my institutional customers that I was handling and said that we at AG Becker will no longer be accepting sell tickets on Treasury bond futures. My customers would kind of chuckle and laugh. An hour later, they would call up to say, sell 1,000 SEP, and I'd hang up on them because I had explained all my context that Treasury bonds were like holding a beach ball underwater. Later that day, I get a call from my boss in New York, John Eckstein, who is a rather an important force on Wall Street. And he said, Brad, I understand we're hanging up on customers when they want to sell. I go, yes, sir. And this is the reason. And I ticked off all the reasons why bonds were going to go up for decades. And at the end of the conversation, he said, Brad, carry on. So I didn't get fired.
So let me just pick up on a theme that you mentioned there about money as a commodity, right? Most people, when they think of commodities, they think of course, pork bellies, orange juice futures, et cetera, right? But why did you see that money was a commodity when everybody else didn't see that so clearly?
Well, that was pretty simple. All the other commodities were priced in that money.
Right. And so the very thing that they were priced in itself was a commodity that influenced them all.
Exactly. So with the financial futures under my belt, I started investing in another new asset class called hedge funds, starting in 1982. The name had been coined by Mr. Jones years before, but nobody was really using the term.
Mr. Jones being Paul Tudor Jones?
No, no, it wasn't Paul, who I know. It was, I'll think of it in a second.
Okay.
He ran the first long short hedge fund at the time. They were really called investment partnerships at the time. But I thought it would be a good method of diversification to take money out of my financial futures account and hand it to other risk takers that had different styles, different focus, different techniques from the market in different asset classes. So it was easier for me to evaluate risk takers than most, perhaps, because I had been a trader. By that time, I had traded on Wall Street, LaSalle Street, and Montgomery Street in San Francisco. So I knew quite a lot of risk takers. And so that turned out to be a pretty good portfolio decision, because I was able to find guys like Richard Dennis and Tom Shanks and Liz Cheval. I was actually Ray Dalio's first customer when he opened up Bridgewater, the very beginning.
Wow. And so I think it was mentioned in an article I was reading about you online, that about the early days, in Chicago, in the pits, and how traders would support each other. And you even funded a guy $50,000 to get back on the floor after he had gone bust, but you made him go running with you at 6 a.m. each day.
On Lakeshore Drive. Yeah.
On Lakeshore Drive.
He paid back pretty quickly.
So what in your estimation does make a good risk taker? What have you seen over the years?
Well, that's multidimensional question, but it kind of depends on the style and time frame. Most of my competitors in the Treasury bond pit, were policemen and firemen, and my competitors thought the Federal Reserve was an Indian reservation in Wyoming.
They hadn't gone to University of Chicago and gotten their master's degree in MBA,
Yeah.
right?
But they were street fighters, and they were very, very, very good at what they did at their time frame.
Mm-hmm.
But it was basically 2-bit at 3. And if they got lifted, it would be 3-bit at 4. So they were just constantly trying to grab the spreads. And that was a very good technique. I've always looked at the markets on a longer term view, maybe too longer term, but I'm not really interested in the day-to-day 5-minute charts and things like that. I'm looking. Right. I think trends are easier to discern in a longer purview.
Such as, bonds being a beach ball underwater 30 years ago.
Bonds had a 40-year bull market. So
right.
One can expect we could see a similar kind of time frame on the bear market. We'll see.
So I take it you're not, you don't think bonds are a beach ball underwater today?
I would rather be waterboarded than own 30-year treasury bonds.
Wow. All right. So moving forward, you've helped start Financial Futures.
So I I started investing in hedge funds in '82, and am credited with inventing the model of seeding emerging hedge fund managers with venture capital, which I started in 1985. So I've done a lot of that over the years. Moved to San Francisco to be closer to technology, continued to invest in hedge funds and alternative assets. My specialty has been new asset classes my entire life. And one of those new asset classes that I'm particularly proud of is I did the first life settlement transaction ever done, which was the purchase of a life insurance policy. And so the timing of that turned out to be pretty interesting because the ability to liquefy an asset that had never had liquidity before became quite important. So started a company, took it public on the NASDAQ. We actually won the Investor Dealers Digest Private Deal of the Year award because we securitized a basket of life insurance policies of people that had terminally ill of AIDS and sold it on Wall Street as a bond, which was really a cool transaction because everybody won.
Those people needed cash from their policies, and you were able to get it for them and make some money off it to boot.
I guess because of my bond background, I finally figured out that a life insurance policy on an elderly person or someone that was terminally ill is really a variable maturity zero coupon. If you can estimate the maturity, you can price a zero coupon. That was basically the theory.
It seems like this is a theme, of something that other people weren't seeing that you then saw that seemed obvious, and that becomes a new asset class.
Yep. Well, I guess it's by design, because I had figured out with Financial Futures and some of the early managers, the CTAs and so forth, that the inordinate returns were often in the beginning before a market matured. So I used to pay some of my earlier managers 6 and 30 on the monies that they were managing for me, which seemed like a lot at the time, but it really wasn't, because there was money laying on the pavement to be picked up in front of the roller.
Today it's more. It's are people even still doing 2 and 20, as they say?
I'm out of every hedge fund now. I have some crypto hedge funds, but the reason I exited this space is that even at 2 and 20, it seemed to me that the set of available returns were not worth the fees being charged to gather them. And so as a result, those fees have continued to march down, and will continue to do so. It's actually one of the strongest trends I've ever observed. And the reason I say that is that the price of commissions and the price of management fees never upticked. They've just been gone straight down. In fact, a couple of weeks ago, I heard of a Texas institution offered a prominent hedge fund that has a very successful track record, a fee structure that I had never seen before. The institution offered the hedge fund manager 1 or 10 and gave him the choice of which he would prefer.
Wow. So if you look back to 1985, the beginning of the hedge fund industry, there was a lot of upside to the market. And now, 40 years later, something has been exhausted, right? And those fees are going down. Is it just more and more people entering the market, or has the opportunities that they were pursuing back in 1985 actually been exhausted? They're not there anymore.
I think it's a combination of both. The set of available returns is just not what it used to be, and there's been very little barriers to entry to the hedge fund world, so we've seen lots of hedge funds.
Right. Yep. All right. And okay, so crypto, is that the next asset class after your life settlement policies?
I've Ron had mentioned 8 years. It's actually been 11 since I've been involved in crypto. I learned about Bitcoin from a 14-year-old Bitcoin miner. I always listen to 14-year-olds. But the idea really resonated with me at the very beginning. Got heavily involved. Began joining the speaker circuit around the world, talking about Bitcoin and so forth. It was basically talking to the same audience at all times, but it seemed like a fundamental change to me. I had found the internet before most, which is kind of a funny story. I was walking down the Embarcadero 4 past the Hyatt Regency, and somebody had scotch taped a hand scrawled sign to the window of the Hyatt, and it said "Internet Conference, 2nd floor." And I said, I wonder what that is. So I walked up to the 2nd floor. There were 3 booths, 7 people, and I bought Rodder.com. I had kind of a similar reaction to Bitcoin and the miraculousness of the blockchain as I did when I saw the internet. And basically the fundamental vision that I had at the time was very simple. Does the internet deserve its own currency? Of course it does. Now it's still early days. It's been 13 years, I think now, since Satoshi Nakamoto did the first block. I've gotten to know Satoshi through some of the work that I've been doing, and it really is an important development. It's up. Excuse me. I think it's one of the most fundamental inventions, certainly in our lifetime, but even preceding that. I said to Satoshi in a conversation with him, I said, I've always used the same phrase in every speech I've given about Bitcoin. And Craig Wright said, yeah, what's that? I go, I've always said that Satoshi Nakamoto, whoever she is, deserves the Nobel Prize. He kind of laughed and said, I've got a big ego, but I've never thought of it that way. Why do you think that? And I said, I think your Bitcoin and blockchain will have a greater impact on the whole of world society than did Christianity. which only impacted a portion. So it's up there with the printing press, the internet. It's really the first breakthrough potentially in the world of accounting in 600 years. Since double entry accounting, the Bitcoin and blockchain promises triple entry accounting, which presumably will have a long-term positive effect on fraud and things like that.
So I want to pick up on a few things there, but I want to go back first and just, you see money, you see that money is a commodity, and you help kickstart the financial futures industry. And then you see that the internet needs its own money, right? So what's wrong? Why can't, the US dollar be the currency of the internet?
Well, I think that's why you're seeing the rush of all the sovereign governments to do just that with the central bank digital currencies.
Mm-hmm.
The main distinction is that in these central bank digital currencies will be like the other fiat currencies. There will be no limit to the amount that they can be produced, and so that there'll be
you need a digital currency in order to to be compatible with digital technology, and not to have the latency that, say, bank-based or even MasterCard, Visa-based transactions have.
Yeah, I think that's true. I think there'll be widespread use of central bank digital currencies, which isn't vastly different than the way you view your balances now at Chase Bank. Mm-hmm. It's pretty much already digital. It's more cumbersome to pay someone in Lithuania with your Chase account. But the real promise of Bitcoin and select other currencies is that they have finite supply. This is the first commodity in the history of man that has a finite supply, which is probably the most interesting thing about Bitcoin.
Mm-hmm.
But
it does have finite supply, but on the other hand, somebody could make just another version of Bitcoin, right?
Well, that's why we're in a bear market.
Because that's what happened.
That's exactly what happened. And it was easy to observe. There are now 20,000 currencies. The analogy that I was using to warn people about the situation we're in is that by having just all of these currencies coming to market, it was like having 1,000 golf foursomes playing universal best ball. When someone hit a good ball down the fairway, that everybody would run to there and hit from there, i.e. steal what the inventions that they had developed, the breakthroughs, the new ideas. And so that's what's caused this enormous pace of development and innovation, which I've never seen before. When the internet started, it was San Francisco. There was a little bit going on in New York, but the internet was San Francisco. And I was just lucky enough to be there in the epicenter. The cryptocurrency is exactly the opposite. There's more going on in Estonia than there is Palo Alto. And it really is a global effort, if you will. And that has enormous ramifications, but there are issues.
Encouraged that 1,000 foursome best ball game has produced some significant innovations.
It's produced very significant innovation, but it's been a negative for the space. In other words, the human beings in the space have not been able to grapple with 20,000 currencies.
Right.
Many of them are ill-advised. Some of them are frauds. It's too much. Human beings just do not have the ability to assess or evaluate or trade or own that kind of number of currencies. So I've been a little bearish. I've been aggressively diversifying for a couple of years. it made me nervous that that on Twitter, crypto Twitter, you would see all these guys like Michael Saylor with laser eyes. That was a very bad sign to me.
Mm-hmm.
There is still disappointing uptake of Bitcoin and cryptocurrencies. Nobody's using it. And
Right.
the industry thinks it's because the UIs are not yet developed. There are immense cybersecurity implications to this. And so I've got a pretty good background in cybersecurity.
Yeah, I'd like to talk about that a little bit, but keep going.
But the Bitcoin happened so quickly that it leapt ahead of its skis with the ability to secure the network and secure the wallets. I like to say that the most valuable data in the world used to be in the Pentagon. That's no longer the case. Most of that data has already been pilfered and stolen and copied. The most valuable data in the world at this moment today, as we sit here, is a Bitcoin private key. And people are coming for them.
Yeah. So you said you've been talking to Satoshi and that you think Satoshi is Craig Wright.
Yeah.
Want to tell us a little bit about that?
Yeah, he's a controversial figure. I've said more people are neutral on Donald Trump than on Craig Wright.
That's true.
But he's I find him to be pleasant, a polymath, and an amazing individual. He is. He's doing just what you would expect Satoshi Nakamoto to have done when he built the project and walked away from it. He labored away in an obscurity and wrote another 1,200 patents on blockchain. So he's a real academician. I think he's got 15 degrees or something like that. So he's a real scientist and futurist.
And he has developed a different version of Bitcoin.
Well, he would say that he's developed Bitcoin.
He's developed Bitcoin, right?
It's being labeled by the asset class as a Bitcoin fork, if you will. It's called Bitcoin Satoshi Vision, BSV.
Right.
It trades at a fraction of what Bitcoin is trading for. But I mean, it's a pretty intriguing protocol, because as you think about these 20,000 competing protocols, the only shortage that's going to exist in this marketplace is for block size, is to be able to put data into an immutable blockchain that can never be changed. And so it's pretty easy to create block space, and many of those 20,000 currencies have attempted to copy the best aspects of Bitcoin, the best aspects of Ethereum, and then put it into a new wrapper. But there's really no shortage, if you will, of block space. It reminds me when in the early internet days, there was a similar market that had popped up that was trading derivatives and futures on something called IRUs. Do you remember that?
No, I missed that.
An IRU was the indefeasible right to use a strand of fiber. And everybody was stringing fiber around the continents of the globe. They got a little too excited about the prospects of the internet, and they laid too much fiber. And the fiber became dark. And all the IRU contracts went to zero. But the main difference between that and block size, and the reason I bring it up, is that in order to lay fiber, you actually had to rent a boat and lay cable on the ocean floor. So there was a gigantic capex involved in doing that. It's not really the case in the cryptocurrency. The protocols are typically open source and can be copied in 30 minutes. So there's no shortage of block size, if you will.
Mm-hmm.
And that's why the market's getting splattered, in my view.
Mm-hmm.
The market also we've never experienced a monetary tightening before.
A monetary tightening.
Yeah.
Like, yeah. There's been some half-hearted attempts with quantitative tightening, but this seems to be in earnest.
Yeah. I forgot to mention, Alan Greenspan was my first boss.
Really?
At the Council of Economic Advisors.
How did you like him?
He was just as gregarious as his reputation. He's very serious guy. He was a gold bug at the time, which I found interesting.
Right. That is a fascinating aspect of Greenspan, that he was a gold bug.
Yep.
And then he became the printing maestro.
Yep.
Good. So other cryptocurrencies that you're interested in today?
You know, I've been a Bitcoin centrist, but it was involved in early
Bitcoin,
days. BTC.
Yep.
I helped pioneer some interesting projects. I've seeded a project called MadeSafe, which was a Scottish distributed, decentralized, distributed database that had great prospects. I flew to Troon, Scotland to meet the team after another 14-year-old had told me about the project. So I invested in
to listen to 14-year-olds.
I always listen to 14-year-olds. I collect millennials. Some guys collect cars. And so that was really a precursor to Filecoin and Storage.J. It was even before Ethereum. It turned out to be a great investment, but it took me literally 2 years to sell the position, and they're still not live today, which is pretty interesting. So I've made some selected bets in projects like Cosmos. I was the seed investor. Casper, which is an enterprise blockchain, I was the seed investor. But I've had a very fine filter, because there's too many currencies, and most of them are duplicitous and unnecessary.
So in terms of, one of the things that makes me a little uncomfortable, in the blockchain space is that, there's so many different chains now, and then you have this idea of multi-chain, right? And, as an example, I was trying to play a pay-to-earn game, right? And I had to go through about 6 different, moves of changing one currency into another, play the game, and then to get it back out, another 3 steps, right? So it just seemed like huge security vulnerabilities, not to mention transaction costs, going through all that.
Was that Axie Infinity?
It was similar to that. It wasn't that, but it was very similar. Yep.
Yeah.
So, do you think that the future of blockchain is multi-chain, or do you think it's going to be one chain to rule them all?
No, I think there'll be numerous blockchains that have different purposes, but there ain't going to be 20,000. There are interesting, very fascinating projects going on, like Helium, for example. Have you heard of that? Helium is a distributed mesh node that all of the members that join that node have the ability to earn Helium tokens by presenting that node to the community to do IoT messaging. Pretty cool idea. And the new antennas that they're coming out with will actually be able to repeat 5G signals. So your neighbors will be able to use your node, make phone calls, and pay you helium tokens instead of the phone company. That's pretty interesting.
It's pretty interesting.
The major problem with cryptocurrency now is adoption. And everybody thinks that it has to do with the UI, the experience that you underwent and the complexity of KYC and sending money to an address, which is a bunch of digits. And those are all key frictions, I think, in this thing. But the real reason why nobody's using this stuff is that if and again, I'm speaking from a US taxpayer perspective. If you're a US taxpayer and you're following the rules and you use some Bitcoin to buy a double decaf non-fat latte, you must pause then, or certainly pause by the end of the year, and figure out the goddamn capital gains on that latte. Nobody in their right mind is going to do that.
Right.
And that's why Bitcoin adoption has been disappointing to me.
That makes perfect sense. Another thing that's concerning to me in terms of, I see all these attempts to try to facilitate adoption, right? But all that kind of, take Coinbase, for example, right? Or OpenSea, et cetera, NFTs. It just seems like all of these attempts to make it easier to use are actually end up being kind of antithetical to the underlying technology itself, right? You end up with these very centralized controllers, essentially, for what's supposed to be a decentralized future.
Yep.
And I don't think people realize that that's what's happening in these attempts to make it more, relatable or accessible to people. But I do think the point you make about having to calculate your capital gains tax on buying a latte is that's a tough one to overcome. And it definitely stops me from spending Bitcoin.
Yep.
Yep.
There's some interesting trends that should be wind at the back for all cryptocurrencies, including central bank digital currencies. I think Elon's Starlink is one of the most significant potential impacts for Bitcoin, which means that a Uganda farmer can basically price his rice and trade it for Bitcoin without leaving the farm.
So what are there, you mentioned helium. Are there other projects that you think are long-term opportunities?
Yeah, again, I have a very fine filter, so I don't like most of this stuff. I've been bearish. I probably own the least amount of Bitcoin that I have since 2013. There are 137,000 Bitcoin about to hit the market from the Mt. Gox distribution. That was a big currency hack. That was the biggest hack that had happened in Bitcoin at the time. And I don't believe that that's been properly discounted by the market. And the reason I say that is I talked today with a female friend of mine who got nabbed in the Mt. Gox heist, and she was not aware that those coins were going to be liquidated and distributed. So I don't think that's been priced into the market.
So we do have some questions here. I'm looking over to this other board here where some of the questions are coming in. So I'll just bring a few questions from the audience in. One is, what are today's 14-year-olds likely interested in?
Well, the times are changing. I have a 26-year-old son. I started paying him his allowance 10 years ago in Bitcoin.
Lucky him.
Son of a bitch is rich now. Left the country. But he he's now living in Stockholm. He was back to visit me when I was still in San Francisco before COVID.
Mhm.
And he went in to see his buddies, and he came back that night. I said, "How are the boys?" He goes, "It's weird, Dad." I go, "What are you talking about?" He goes, "None of them have jobs. They're all living at home in their father's basement.
Hmm.
They sit home every night and play games and smoke a joint, and they've given up chasing women. They know if they go into San Francisco and look for girls, it's going to cost at least $120, and they're going to come home frustrated. So they've made the decision. They're guaranteed a good time if they stay home with their buddies, get stoned, and play video games,"
Wow.
which was
That
which
doesn't bode well for our economy.
which was different than when we grew up.
Definitely. All
So-
right. Despite the cycles, it does seem that the Fed removing the commodity of money from the world financial system, that is quantitative tightening, is the primary determinative for all the worldwide bear markets, including Bitcoin and other cryptos. Would you agree?
I do agree, and it's a pretty unusual period. I was talking to a trend following pal of mine in Chicago named Anthony Strassman, and he runs a trend following indicator. And he called me and he said, "For the first time in my career, everything in my model is short. There wasn't one long out of, say, 40 positions." I thought that was very significant. I had not seen that before.
Wow. That's sobering.
It is.
What do you think about Russia creating a blockchain SWIFT alternative?
It's exactly what I would do if I were them. And so we're really living in a Tom Clancy novel at the moment with modern weapons. I think one of the most significant.
Picking up on that theme about homeland security, cybersecurity, et cetera, let's cover a little bit of that too.
Yeah, I had figured out very early on that the war in cybersecurity was a war I wanted to fight, and it was unlike the previous wars that I studied at West Point and since then. But the war in cyber was unique in three different ways. Again, according to my analysis, the war in cyber is the first war in history that can't be won. There's no flag, there's no capital, there's no general command staff to surrender.
Wow.
It's the first war that can't be won. It's also the first war.
I don't know what that even means.
It just means
endless war.
It's endless cyber war as long as we're using computers.
Yeah.
It's also the first war in history that we're facing thousands of adversaries, nation states, criminal gangs, terrorist organizations, pimply ass teenagers in their dorm room. We're facing thousands of armies at the same time. And last but surely not least, it's the first war in history that we're all on the battlefield for. The wars used to be over there somewhere. So this is my kind of war, and I not only is it important to fight, but I think everything else rests upon it.
And I've heard you call the time we're living in World Financial War I.
Well, yeah, I was going to mention that earlier. That of all the macro things going on right now, I think the United States capturing Russia's sovereign FX reserves will go down in history, perhaps with Nixon closing the gold window.
Mm-hmm.
You can't really take someone's sovereign reserves. They're sovereign. And I believe that move by the United States is causing sovereigns all around the world to rethink the perceived safety that they had before that move in owning US stocks, bonds, its currency. I'm not sure the United States deserves to be the reserve currency. And if that slips and begins to slide, the only event that I could think of that could happen to the planet that would be worse than the loss of the dollar as a reserve currency may be a multiple meteor strike. It's going to affect everything. And
well, somebody's buying the dollar today.
It's
going up and up. Although
yeah,
I think the ruble's going up more than the dollar.
absolutely. But I mean, it's very strong now, and there's lots of dollars that are panicking out of Russia, Eastern Europe, as Europe itself. So it's the cleanest shirt in the laundry, but the dollar has been going down my entire lifetime.
Mm-hmm.
It's lost 95% of its value in my lifetime, and I'm still young.
Right.
Mountain Dews used to be a nickel in Iowa in the vending machines. Now they're $2. That's approximately 95%.
That is. So looking at all this, we've got this revolutionary technology, blockchain, although, and you've said banks will become as common as blockbuster videos.
It's interesting. Bank equities are acting miserably here, even in a face of an increasing rate environment where they should have had a bid.
I'm just, you see such a big picture. I'm wondering, what does this picture mean? All this stuff going on. You have blockchain coming online, disintermediating the banking system. You have cyber warfare, endless. You have World Financial War 1. What does this mean for, the average person watching this interview?
Well, the average person watching this interview, the average human in history doesn't really get to experience the peak of a great civilization, although it happens over and over and over. I've been giving speeches for years called "Investing at the Peak of U.S. Civilization." I think we're there. I think this is what it looks like. If we were experiencing the peak of a great civilization, it would look a lot like this. And so
it's not about to all get better. It's going to be all downhill from here. Well,
I mean, that's perhaps where cycles can come into play and be our guide. It sounds bold to call a peak of civilization, but it's really not. There have been thousands of civilizations come and go. Every single one of them has peaked, and it's very difficult to see the peak, to contemplate the peak of a civilization when you're in the middle of it, because the ramifications are so extreme, your brain doesn't even let you go there.
Yeah.
But they all peak. And one of the greatest geopolitical events that's happened in the last few months was the China-Russia no limit alliance. Did you see the details of that?
No.
So I think it's significant. It's now 2 against 1. It may be 5 against 1 if you add Iran and North Korea and our other adversaries. So,
and it's interesting to see the world leaders that aren't opposing, the Russian aggression, right? So you have India, Brazil, a lot of the BRIC countries.
Exactly. And we're seeing what's really interesting, I think, from my perch is we're seeing lots of very complex systems begin to collapse in unison. The food production, energy delivery, refining of energy, air travel has collapsed in Europe. Have you been watching that?
I mean, I see bits about it in the news, but I've been staying home for a couple of years.
Yeah.
So it sounds like my biggest takeaway is that we need to let our minds be open up to a new world, really. We can't assume that the future is going to be anything like the past right now.
Right. Right, I agree. And one of those complex systems is our supply chain. So
Yeah.
I think one of the most important macro events ahead of us in the next 10 years is going to be the re-onshoring of our supply chain, which is going to cost a lot of money and be inflationary. But from a national security perspective, we have to be able to make neon gas in the United States. How come we're not doing that?
Mm-hmm.
Neon gas is produced in the Ukraine, and it's absolutely required to process the manufacturing of microprocessors. We have no neon supply.
Do you see investment opportunities in the onshoring of supply chains? That seems to
Yes,
me
and
a
I
major
think
theme for, if we're talking about the next couple of decades. What's your favorite trend for the next 2 decades?
Well, there'll be a couple of competing aspects of the onshoring. The biggest thing that I'm worried about is the collapse in fertility, not just in the United States, but around the world. And a lot of that has to do with the economic value of children. And I learned this at an early age, and I often refer to the Krogmeyer example. Have you heard of the Krogmeyer example?
I have heard it from you, but why don't you tell the rest of the audience?
So the Krogmeyers were our next door neighbors at the farm next to us in Iowa, and they had 9 children. When the school bus would stop to let them off, we'd be there for like 8 minutes as they were piling off the bus. And as the bus pulled away, you could see the Krogmeyer children fan out across the farm. Some would go to the kitchens to begin the meal. Some would go to the dairy barns to milk the cows. Some would go to the hay fields to bring in the hay. They were 9 economic assets.
Yeah.
I have a 26-year-old son, and he is not an economic asset.
Nor was he when he was 14 either, huh?
So the value of children, there's no other way to say it. The value of children has gone down.
Yeah.
It's too expensive. And so
that's a problem.
Can that problem be solved? I mean, that's a pretty big problem. I think one of the near ways to solve that problem with onshoring is going to be robotics and 3D printing.
Mm-hmm. Yep.
3D printing hasn't really happened yet, but my friends at Singularity University think that 3D printing will be so important as it will impact ocean freight. More things will be made locally. Clearly, robotics are going to be a big deal.
Mm-hmm.
I like to say there's only going to be 2 kinds of people: those who design robots and those who work for robots.
I'm not sure I like the idea of that future. All right, Brad, anything else that you want to share with our viewers?
Oh, well, I think just to accentuate the last part, there's a gigantic, if you believe in cycles, as we all do,
Mm-hmm.
one of the most important cycles that we're going to be dealing with now is the cycle of the global pendulum that swings from globalism back to populism. And that's going to be a worldwide phenomena. That pendulum, I believe, is gaining momentum. They will tend to overshoot, if you will, but I think that's probably going to be a tradable play in the longer run.
More populism.
Yeah.
Yep. Fantastic. Well, Brad, we really appreciate all the time you've given us. We appreciate your support for the Foundation for the Study of Cycles. And it's been great talking with you. We've gotten tons of questions, so we'll probably follow up with some, and maybe we can share them via email with the audience and later on.
Happy to do so.
Thank you so much.
All right.
Bye.